I want to talk to you about substance over form because it's an important phrase that occurs in the conceptual framework, and I want to tell you how it's applied in several different accounting standards. My name is Tom Clendon, and I am an ACCA SBR lecturer, and I help students pass their SBR exams. So, substance over form. What does it mean? Well, another way of saying substance over form is to say truth over law. What we're doing in accounting, in reporting, is reporting the truth, is reporting faithfully. We're reporting in a way that's true and fair. And that means that we are applying judgment rather than simply being very literal. Now, normally the law and the truth coincide, but where there is a conflict, we must report the substance over form. So we have to genuinely understand the essence of transactions, the substance of transactions, the truth of transactions, rather than how they present themselves. And that way we stop creative accounting. That way we are true and fair. So it's embedded even within the conceptual framework that as accountants, we want to produce information which is useful. And for information to be useful, it has to be a faithful representation. And for it to be a faithful representation, we need to account for substance over form. So much for the theory. Yeah? Let's have a look at some practical examples. And there's a very famous practical example in the context of leasing. IFRS 16 leases. And this standard is a good example of one which has been influenced by the conceptual framework because it gives us a practical example of substance over form. Now, if you're a lessee and you're leasing an asset and you're paying a material amount of money to lease an asset for more than a year, the standard requires that you recognise the right of use, you recognise an asset on your statement of financial position, even though you don't legally own it. A lawyer would say, what are you doing? You're putting an asset on the balance sheet and it's not yours. As an accountant, I have to say, yes, but I'm telling the truth. I'm reflecting the substance of the transaction. It is an asset so far as the accountant is concerned because we're leasing this asset, we control it. We have the keys to it. We get the economic benefit from it. So in substance, for the right of use period, for the 2-3 years that we're leasing the asset, it is our asset and we show it on the balance sheet. Not only do we show the asset on the balance sheet, but we'll also show the liability on the balance sheet as well. Because the lawyer would argue, incorrectly in my view, incorrectly for the exam's point of view, the lawyer would argue, legally it's not yours, therefore don't show it. But if you do that, the liability is off balance sheet. If you do that, you're being incomplete. If you do that, it's creative accounting. If you do that, it's all wrong. The standard is built, the standard is built on the principles of the framework that we must reflect substance. The same is also true when we come to think about sale and leaseback arrangements. Yeah? Is it a sale and a leaseback? If there is a performance obligation within that, yes, then you sell it and you lease it back and you account for that. But some so-called sale and leaseback arrangements end up leasing the asset back for the whole of its life. And so there's no performance obligation in the first place. And therefore, although it's called, in inverted commas, a sale and leaseback arrangement, some of those arrangements, in truth, are loans. And so the proceeds that come in should be recognised as a loan rather than the disposal of the asset in question in the sale and leaseback arrangement. substance over form, truth over law. It applies beautifully within the leasing standard, but it's also there in revenue. IFRS 15, revenue from contracts. Just because you've issued an invoice, just because you've passed legal title to the inventory, doesn't mean to say that triggers the recognition of revenue. When do we recognize revenue? It is not when the lawyer says that we've made the sale, we've issued the invoice, or we've passed legal title. We need to reflect the substance. We recognize the revenue when we have fulfilled the performance obligation, when we've done what we've said we were going to do. And that can be at a point in time, or that can be over time. But it's not automatically the date of the invoice or the date that the title passes. We have to use our judgment. We have to apply the accounting standard. And we have to apply substance over form and the principles of the framework if there isn't an accounting standard. So, for example, crowdfunding. Traditionally, there's no standard on crowdfunding. And traditionally, companies, when they wanted to raise finance, would go to the stock market or would borrow money from the bank. Now, because of the internet, because of disintermediation, companies are able to raise finance from the crowd, from the public. And when they do that, we debit cash, we've received money, and we have to understand and explore the substance, the truth behind that crowdfunding arrangement. Does the company have an obligation to pay the money back? It's debt. Has the crowd got some kind of ownership interest? It's equity. Or is there some sort of sale of goods going on, in which case it's revenue recognition? It's always important, as an accountant, to understand the transactions that we're dealing with, and then you can account for them in a sensible way. When things are overly complicated, overly legalistic, it's almost a warning sign to step back. We need to keep it simple. We need to report substance over form so that we have a faithful representation, so we are providing useful information to the users. My name is Tom Clendon. Please like, subscribe to this podcast, however you're listening to it. I am here to help students pass SBR on the ACCA examination. Please reach out to me if you need further help or advice or support. God bless.